The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 9th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, with the bulls and the bears, the buyers and the sellers, what they're communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence, but more importantly, I am here to serve you. So feel free, pick up that phone at any time, dial it in. Would love to hear from you. 877-927-6648 is the number. Of course, internationally, you can call us at 727-445-1044. So let's go ahead and get this magical Monday show kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow traded off 38 points. She's traded at 17,702. S&P is up 3. NASDAQ Composite up 24 points, trading at 4760. Russell is up 6 points, trading at 1121. The DAX closed up 110 points, while the FTSE closed off 11. We've got gold trading back $27 at $12.67. Silver's back 50 cents at $17, even Steven. Light sweet crude trading out at $43.52. That's a buck 14 to the downside. Lighting a fire to the upside dollar-wise, it is Chipotle, $19 to the upside, a little over 4%. Allergan up 6%. No idea what's behind that rally, but it's up about $13. Amazon is up $10. Google's up 8. Regeneron Pharmaceuticals up 7. Murphy USA up 7. Biogen's up 6. To the downside here, individual stock-wise, it's Priceline leading that charge, down about $9, $8.56 to be exact. 1241.54 is the number that it's trading out at. Tesla's off $6, nearly 3%. Core Laboratories down nearly $3.75. That's 3% to the downside. Cal-Maine Foods off $3. Randgold down 3. Well, most of the, maybe all of the mining equities trading to the downside. So we've got kind of a directionless market per se during the day today. So we haven't seen the market really do a whole lot. So what is it that we're going to focus on? Because really the question, just really one question, right? Bounce, counter trend rally / bounce, or bounce / bottom that is in the market. And so let's go take a look at some levels that we need to watch for to help us answer that question. So what is Stevie watching for? Well, the very first thing is, where is it? It's this chart right here. So if you're watching us on Tiger TV, I'm going to put a chart up on my screen. This reflects 3 of the equity futures contracts. The top panel is the ES-Mini, the S&P futures. It is the 5-hour energy drink chart. So it's a 5-hour chart that we're looking at. All 3 of these are 5 hours, 300 minutes. The center panel is the NQ. The bottom panel is the Dow. So just looking at those 3 futures contracts, and this is really what I'm watching for to help us identify whether at this stage, which at this stage of the game, it's only a counter trend rally. However, the 5-hour time frame that we're in right now inside the NQ is saying, hey, maybe not so fast. Maybe this is more. Maybe this is a change in trend, at least utilizing that time frame. The best time frame, other than getting to the daily to give you a good, we'll call it short term, right? We'll call daily short term. We'll call weekly intermediate term. We'll call monthly long term. And every other intraday time frame, I guess is ultra short term out there. Not necessarily ultra short, but ultra short term. So As we take a look at the ES Mini, I'm looking for Stevie's red and black line. You'll see a couple of squiggly lines, not the horizontal dashes. Those happen to be the TAS market profiles. And those are very important. They're very important. You'll see those maybe a little bit better when I switch to the same time frame charts, but with the black background out here. But as I take a look at the ES Mini, the top portion, if I get a little crossover of that red and black line, to me that's going to signal that we have more of a change in trend on the daily, which we're referring to as a short-term time frame out here. But we will have that, which is what we have right now on the 5-hour chart for the NQ. But that little crossover, it all depends upon where price closes coming into the 2 p.m. session. And even though we've gotten that, there's another hurdle out here for the NQ that it needs to get up over and close above, which you can do. I don't know if it's going to do it by 2 o'clock, but it certainly can do it by 5:15 this evening, and that's getting above its red dash line, that TAS market profile out there. Now, the interesting thing is really the bottom panel of the chart, which is the Dow futures contract. I'll go ahead and shrink maybe the top and the center here just for a bit. And the reason why I think it's the most interesting chart at the moment is because the Dow is the one that has been struggling all day long out here, right? It's the index, and when it came on the air, I said it's trading to the downside 30, 40 points. It's been down, as much as 50, 60 points, something like that. Not really a big deal. However, on the 5-hour chart out here, it has formed a brand new, now it did this earlier at about 9 o'clock this morning, but this has actually formed a brand new market profile, and it has done it at a higher level, a higher low and a higher high out there, and that is a bullish sign. And we can also see, you have to really pay close attention, but we're also starting to see that little bullish crossover in the Stevie lines out there. So this says that 17,702 level, take a look at the Dow futures contract, is really important. If you get a close above that, the Dow, should be in the green today. And there will be one other indicator. We'll take a look at that advanced decline indicator that should then get above zero. And then you would have a message coming from the Dow, which has been the weakest today, that would be saying, hey, I'm not really as weak as you think I am. So that's what we're going to watch as I switch over here to the 5-hour charts. Now, you remember on Friday, we were looking at the pattern inside the Dow, right? We said the Dow was the most important of the charts, and that was because you saw it on the other one, but here we'll bring up this chart here because we had that nice that nice little 7th wave move to the downside out here that took place at about 9 o'clock in the morning. Then coming into 2 o'clock, we were on the show, nice big old bullish engulfing candle out here. So it's got a very nice natural normal bottoming, just like it did the last time at the highs out here inside of the Dow. And as I say, if it can get above that 17,702, you see that market profile out here that has acted as resistance. It's an important line of resistance. Closing above it says an important line of resistance will have failed. As I switch over to the 5-hour charts on this screen, now what you can do is look at my data boxes. Those little data boxes with the little red rectangular outline around them. And then you can see all of the market profiles for the 5-hour time frame out here. I'll go ahead and make sure my cursor's in the right spot. There, it's in the right spot enough, and you could actually write those down to identify levels of support and resistance. Well, if you take a look at the NQ, I said there's a couple other hurdles that it needs to overcome. So we want to watch the NQ as well. We'll go take a look at those levels when we get back from this break. Of course, I'd love to hear from you. Steve Rhodes at TFNN.com, 877-927-6648. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to that break, what we took a look at during the first session of the show was we looked at the 5-hour charts for the Dow, the ES Mini, and the NQ. We then took a quick peek at the larger screen for the Dow because that gave us the best signal of at least a short term. Now we're referring to on a daily chart of a bottom, and the question becomes, counter trend rally or bottom out there, and we're just simply trying to understand that at this stage here until certain levels of resistance get cleared, it's just nothing more than a counter trend rally. To suggest that this has legs for days to come out here. Now, what we're also focused on is the NQ. Why the NQ? Well, the NQ is the indice that really dragged things to the downside, right? So that's been weak. If the market's going to have more than a counter trend rally, it would stand to reason, at least the reason that I'm going to give you, is that we would also see a turnaround inside of the NQ. Now, inside the NQ out here, what we can see is a nice little trend line. That trend line coming off of the high back here on April 19th, sometime between 4 and 9 o'clock in the morning when price got up to a high of 45.8450. And all that I'm using, just no channel line or anything like that, just as a trend line out here. I'm using my next touch point, the intra-session high during that 9 to 2 p.m. time frame on April the 21st out there. So it just so happens that that line of demarcation, that trend line, is lining right up with the top of its current 5-hour chart here for its TAS profile. And that is priced out, as you can see, the top of that box, 43.6050. If the NQ can close above that, it doesn't have to close above it before today's close. If it can close above it, then that would signal to us that we likely have more than just a short or small counter trend rally. Look, this can still be a counter trend rally as long as it doesn't get all the way back up to its highs out here from back on the 19th, right? It could be making a 0.6 to an 8 retracement, even a 0.382 is at 43.90. The 0.6 to an 8, 44.64 out here. But we're really trying to understand the potential duration of this rally that is trying to unfold out here. We don't have any real confirmations. We have clues, but we don't have any kind of real confirmation as we speak. At least I don't see that real confirmation. If we get a close above 43.60.50, then we're there. Now, the trend line out here, I can easily extend that out. And if we have a market that doesn't do much for the next several hours, and eventually the trend line is going to be busted through by just simply moving sideways. That has never, been for me any kind of conviction to break a trend line just simply by moving sideways out there. Then at that stage, you say, let me go find some other tool. In this case here, we'll stick with our market profiles to help us determine whether or not there is some kind of a trend that is in place out here. So that's it with regard to the NQ. If I were to, and the ES has not, gotten anywhere near its trend line from the highs back here on April the 20th. We'll go ahead and blow that up. Oops, I didn't mean to shrink the actual package. Well, actually, I had intended on blowing up the chart out here. But right now, it's given us a slightly bullish signal. Why? Because price is above its TAS market profile in the 5-hour time frame. That, by the way, is priced out at 2051. So 2051, once price got above that, it's been tested ever since about 2 o'clock in the afternoon on Friday out here. And so it continues to hold as support. That says that price likely heads up to that trend line. If we just look at that in Fibonacci terms out here, that says that the next move is up to the 2076 level out here. Now, it's not going to motor on until we see the Dow do its thing, until we see the NQ do its thing. But the signal coming from the ES Mini is that it wants to get up to that trend line area, and that is also about the 0.618 retracement in the 2076 zone out there. So, and the Russell 2000, it's got a shorter trend out here because it was moving higher as the other indices had started to roll over, specifically the NQ out here. So it's actually already above its trend line. So the potential weak link out here is saying, I am not weak. I've already broken my trend. Come on, boys and girls. And this also has gotten above its 5-hour profile out here. So all looks good. This is what I'm watching, these 5-hour charts, in order to go ahead and give us some type of signal as to the potential duration of this. The other thing, of course, that you and I are looking at, we continue to focus on the advanced decline oscillator out here. In the Dow, it's just below zero right now. Easily a little surge here with a couple more advancing issues inside the Dow. We'll get that above zero. That would then say to me the VIX index will run down to the 1357 and lower area. That would go ahead and put some liquidity into the markets out here. It's already showing us that there's plenty of liquidity out here. And of course, Stevie says that by just looking at where the VIX is traveling in relationship to its 50-day exponential moving average. That is the upper panel. That is the yellow line that is on the chart. That price, by the way, is 1577. That 50-day exponential moving average has acted as resistance, and price is unable to close above it. Did price close above it for a day, for a smidgen of a time on May 4th? Yeah, because the 50-day exponential was 1585 and the close was 1605 out there. But that's it. It has failed other than that one single day out here, so no follow through. And that says to me that the VIX index, the cash index, wants to trade down to the about the 1357, most likely lower, and maybe come and test this little hammer candle from April the 20th. By the way, the low of that was 1250. The high was 1350 out there, and that is on the VIX index. And that is really my take on the markets. Now, what is creating some additional headwinds out here for the market? Because the only thing that I can also see out here, of course, you might just say, hey, Steve-O, it's sellers. But if I take a look at, correlations out here, it's not helping the markets today. And I think this is more why we're not seeing a whole big flurry out here, is because you've got light sweet crude. I don't know why I chose platinum out here. That was probably a head fake. But it's really light sweet crude. Now I got gold. Eventually, I'll actually hit the right symbol out here, and then we'll see it pop up on the screen. Let's go put the daily time frame out here. And you can see light sweet crude is trading lower. Now, what we don't know is light sweet crude going to just simply pull back to the bottom of its rising price channel out here? Now, if we see it close below the trading day from May 4th, that low is 43.22, then that would suggest to me we're going to see light sweet crude pull back to the bottom of that price channel line. What does that mean for the market? It means we could have a stalling to a lower market out here. It means we could have a market that decides to just simply move much, much lower. But with the VIX index trading the way that it has, to me, that is, if we take, it used to be the euro yen, right, that I paid attention to from a liquidity gauge. It's lost a little bit of its luster. If we were taking a look at that, we would say, oh, look at this move here in the euro yen. Huge move, at least with regard to today's action. Of course, nothing more than a huge move to the downside back on April 28th. But just in looking at today's action, if we were going to use this as our liquidity gauge, we would say, what are you talking about? It's got plenty of liquidity out here. So I think it has more to do with the light sweet crude trade. If we go ahead and we put our market profiles up on the screen here, let's go see where other potential levels of support are, at least on the daily time frame. And that's going to be 42.93. Haven't gotten there yet today. Close. No cigarino. That means price, we've gotten down to a low of 43.35. You know, what are we talking about? 42 cents away. Nonetheless, that is likely the target, somewhere between 42.70 and 42.93. Steve Rhodes with TFNN. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 27 right now. S&P is up 3. Gold is back $27. Silver's off 50 cents. Let's go take a look at those. Now, most of you, or pretty much all of you, know that the charts that I prepare and take a look at, they are all spelling toil, double trouble, whatever it might be, that there's going to be a major move in gold and silver to the downside. Today's move, no big deal. 27 bucks to the downside, 50 cents in silver. Silver maybe a little bit more, but this is nothing compared to what I'll call the smart money, the large money, has the way that they have positioned themselves. They position themselves in ways where when the ball gets rolling to the downside, it probably will be fast, it will be furious out here, and it's not going to be to just some type of short-term retracement level that's out there. If we take a look at gold, though, today, we've seen the story here for a while. I can't tell you when it is going to occur. Are we seeing some potential chinks in the armor today? Yeah, we are, but the trading day is not over, and volume has been relatively light out here. But these guys, they've already shown their hands out here. Maybe they're just trying to, to protect the tell from those that aren't really paying attention. But if we take a look at just simply the retracement levels from high to low, let me go ahead and turn off the profiles here for a moment. The dead cat bounce, a 0.382 retracement, gets gold down to 1207. Is that where gold, when the retracement begins, the real retracement, the real decline begins, is that where gold is headed to? Absolutely, positively no. 1146 is your 0.618 retracement. Is that where it's headed to? Perhaps. I would say more likely 1102. 1146, 1142 is really the range that we should be looking for. We'll take a look at what other patterns. What's going to occur is that, everybody and their brother TV, everybody's been saying everybody should be piling in on gold. And you know what? In essence, that's really what has been taking place out here. Of course, those large commercial traders, they have been doing it at the expense of the little guy. They're all, they are now at net short positions, highest level of net short positions in years, at least the last 3 years out here. And that just means really, well, it only means one thing to me in taking a look at the chart action out here, and that is that there is going to be a huge plunge to the downside. Now, it's very possible that I'm wrong out here, and that just means make sure that you're using stops and honor those stops out here. But the big guys, the big money, they're not just looking for your garden variety retracement in this nice move to the upside out here. And it is nothing like it is not a $27 move that is going to be. Now, there's an entry. Let's just say that I am wrong on my interpretation of commercial traders out here for both gold and silver. Let's just say, Stevie doesn't know what in the heck he's talking about out here. Well, I'll present a second piece of information to you. When we take a look at gold, probably the two largest currencies where we take a look at gold priced in. Of course, most of us only look at gold priced in dollars. Well, not most of us. Most people, not you and I. We know that you have to look, underneath the stone, to look for clues out here. And the second currency that you and I look at is gold priced in euros. Now, there's great correlations that can assist us in identifying when there's problems in this shiny metal out here. And if you're looking at us, if you're watching us on Tiger TV, what you see, the chart that is now on the screen, the top portion is gold priced in U.S. dollars. The bottom portion is gold priced in euros. Now, you'll see some red diagonal lines and green diagonal lines. What typically occurs is that it is gold priced in euros, the bottom panel, that gives us the real sense of the direction of where gold is headed. And go back here into the time frame of September 2014. We saw the price of gold moving lower into that early October time frame. And what was priced in euros doing? It was moving higher. We saw a nice little bounce out there. We saw the same kind of pattern as gold was moving lower in U.S. dollars back in December of 2014. What was it doing in euros? Well, it had the exact opposite pattern out here. As gold was moving lower into the time period of March 17, 2015, what in fact was taking place inside euros? Well, we saw that was actually moving higher. We saw gold actually make a slightly higher high back in May of 2015, a little bit higher high than occurred on April 6, 2015. And what was going on in euros, right? Exactly. You had a diverging pattern. That led to, in fact, the move down to form that bottom inside of gold back into the early part or mid-December timeframe out here. And now, if we take a look at that slightly higher high, that form. This looks very much like the old May. Maybe the sell in May, that was May 18th, by the way, 2015. Maybe the old sell in May is going to be the sell in May gold out here, because we have that same pattern that is in play right now. Priced in dollars, we've seen gold make a slightly higher high. We go ahead and put this on the close, and we take a look at the movement in the past nearly 3 months out here. I believe it's 3 months. We've seen a $30 move in gold. Does that sound bullish to you? Really? Is that come on. So what we've seen here is a move higher, priced in dollars, and we've seen a move lower, priced in euros out here. And interestingly enough, with regard to the priced in euros, if we take a look at a trend line out here, now this was a rising trend line. That's the green line that just showed up on my screen out here. We saw that was a nice trend line. We saw price get back below it right around April Fool's Day, right around April 1st. And we've seen price try to break up inside it, and it has failed to do so. So that's what you like to see with trend moves. You break a trend, you like to see price come back, test it, and reject it out here. Price still traveling below that trend line. So I think there is another piece of information out here that the market is trying to communicate to you and I. What does that mean? That means use stops, and that means this is when it does get rolling to the downside, it's not 1207. It might be 1146. You're at 1266. That's $120. I don't think so. It's probably 1102. And then what we want to be watching for, we want to watch for that pattern to set up, because it's really when everybody is saying, you know what, you shouldn't have put gold in your portfolio. That's when you and I want to be able to jump on that train out there. So right now we got the Dow off 22. We've covered just nearly about everything that I can think of. We've covered the markets. We know what to be watching for there. Silver, well, we didn't take a look at silver out here. Let's go ahead and put the silver chart on our screen. Probably the keyest level out here at $17. Another 67 cents or so to the downside would then all of a sudden take silver back into the lower part of its range. That's the October 28th swing point out here. If we take a look at market profiles, let's go see what we've got on here as we put those on the screen and we decorate our chart. We can see that silver now getting back to an important low out here. Its daily TAS profile at 1693. We see a close below that. That basically says that the move in silver should be able to get some legs and take it down to about the 1543-ish type level out here. But the first area to be watching is going to be 1693, then 1637, and then from there, who knows, but 1543 is likely going to be the spot out here. Of course, we've seen, we know that Rand Gold out here, Rand Gold Resources, got that big island reversal pattern out here. That is still in play. That doesn't look good. That suggests $74 to 80 at a minimum out here. Dow's off 28, S&P's up 4. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's off 33, S&P is up 3. You know, at the same time that commercial traders are wagering on a move lower, significant move lower in the metals, they have the opposite side of the dollar trade out here. And if we take a look at the U.S. dollar index, you're going to see really a couple of different patterns. I know this is looking at the current contract out here. You'll see a 3 drive to a bottom pattern that was confirmed with a hammer candle out here on May the 3rd. You might say, well, what's a 3 drive to a bottom pattern look like? Right here is drive 1. That was March 18th low. Then you've got the low out here on the trading day of April 12th. And then the projected low out here was actually on May 2nd. The low at the bottom came in on the U.S. dollar index the very next day. So this is not a forced pattern out here. And typically on a 3 drive to a bottom, sometimes it could just simply be a significant low, which I would anticipate at this stage that that's what it is. Let me see if I can go ahead and erase this. There we go. But at a minimum, you anticipate that price is going to come back to drive number 1. So that would say that the U.S. dollar index ought to make its way back to 97.09 out here. Now, when we get the continuous contract going out here for the U.S. dollar index, and we put this on, let me just put this on a weekly chart. It'll just be a little bit easier. What we can see here, I can get rid of this because the U.S. dollar index did not break below the consolidation. You can't bust it down. What do? You try to bust it up. So this says that the U.S. dollar index, and this is really what commercial traders, the positions that they've taken with regard to the currencies that make up the U.S. dollar index out here, they've taken a very, very large or short, small net short, meaning they basically are effectively long the U.S. dollar index. So a bounce up to 95.21, nah, not in the cards. 97.26, very likely, perhaps beyond that, into that 98.70, and perhaps even up to the par level, up to 100 out here, because again, you've got nothing but a nice little, this is the weekly chart, but on the daily chart, you've got a very nice bottoming pattern that is out there, significant bottoming pattern. But we'll know more as we see the U.S. dollar index when it gets to that first target level. And again, that price is going to be really where that 3 drive pattern, that's a weekly chart, where that 3 drive pattern began, which should take us somewhere up into about the, as I say, about the, the 98-ish type area out here. Maybe it's going to be that little spike high from March the 10th out at 98.50. So watch for that inside the U.S. dollar index. Of course, the first stop is going to be right up here in the 95.16. So you're 94.17. That should be where it first finds just some natural resistance, its prior swing point out here. Okay, so that takes care of that. I guess let's switch over since I don't see any questions inside the den. I don't see any. I see it. I do see an email question here from Michael P. He's got puts on the FXI. Any thoughts? Figured a move down in our markets would start in China. So let's take a look at the FXI. I don't recall if the FXI correlates to the Shanghai or if it relates to the Hang Seng or neither of the two. Maybe somebody in the den knows. And if so, you go ahead and post that in here. But if we take a look at the FXI, and I'm going to switch over also to another tool on a different screen so I can answer Michael P's question as well as I can. He's got puts, and I would say first you want to trade this irrespective. Is irrespective a word out there? You want to trade this just based on trading this and not necessarily have to go ahead and correlate it based upon our markets out here. And as we take a look at the FXI, no question that I can see the downturn. Let's take a look at price targets. Let's go see what it's actually done. So since the low in FXI February 11th all the way to the high out here on April 19th, you can see that it's already made a 0.382 retracement level. Let's go ahead and add our TAS market profiles out here. So from a retracement standpoint, Michael, you should be targeting as your next level out here. I don't see anything today that says you shouldn't do anything but target the 3081 area. And we'll take a look at places where you don't want to see a close above. That would tell you that the trade has likely lost its steam to the downside, right? We've got to take a look at that. We'll turn off the Fibonacci numbers. Let's go ahead and put our TAS market profiles in. We now have both daily and weekly. Now, when we take a look at, let me go ahead and blow this up on the screen, make it easier for all of you watching on Tiger TV to see this. So what you actually have taken place on Friday as well as today is you're now down below the weekly profile out here. So the first level that you want to be watching for is 3212. You want to continue to see 3212 act as resistance. If it fails, the next level you want to be watching is 3243. If you get above 3243, this says that this equity could run to at minimum 33 and a quarter out there, perhaps even higher. So those are two numbers utilizing this set of tools that you want to be paying attention to. Now, I'm looking at two screens out here, and I show as another tool 3321 would be a number to be watching. So where does that line up with any of this? So that really becomes pretty easy. Again, you've got, for me, it becomes pretty easy. You got 3212. You've got 3321 is the number. You really don't want to see it close above that. And then you've got 3243. So 3312 is going to be, 3321 is going to be your line of demarcation. Now that's as of today's signal. Those numbers will change effectively, the 3321 could easily change tomorrow or the next day out here. Downside, where is it that this thing could move to? And today's volume, by the way, Michael, 19 million shares to the downside. You know, the last time that it made a low out here was with 29 million shares on March 10th. That's not what you wanted to see. You want to see price coming into a swing point with accelerating volume. And with 2 hours left in the trading session, it's not doing that. Does that mean, now it has not tested the swing point low, but, you know, let's just use this as a volume gauge out here. Where are other places where this thing could target? I just simply have to go back to our TAS profiles out here, and I would say the center of its weekly box is 2971, the bottom is 2890. Those would be your target areas, both to the downside and to the upside inside of FXI. All right, so that takes care of that. Again, if you've got any questions, just throw them in on the Tigers Den or go ahead and send me an email. Lines are open. Let's go take a look at some individual equities that are moving out here. Let's look at Chipotle. That is the dollar leader to the upside. That's up about 21 bucks, nearly 5%. Nice wide-ranging bar. This is taking out a recent gap out here. And let's go see. We've got volume so far today of 890,000 shares out here. Now, that's after this thing had gapped down back on the trading day of April 27th with 3.8 million shares. Nonetheless, it looks like Chipotle on a little fire, and looks like that's headed to its weekly TAS profile at 474.97. That looks to be the number. Now, what has Chipotle done outside of that, even though it's a light volume day out here? Well, one of the things that it has done is it has repaired a window out here. The window where this had gapped down did and should have continued to act as resistance, but it's failed to do so today, 438.72. So old resistance ought to become new support out here. So 438.72 ought to be the number. If Chipotle, and what Chipotle is also doing out here, let's just take a look at a quick trend line, then we'll go to our last breakout here. But this thing today has broken a trend. So Chipotle, it might have some real legs in it. And this could easily make its way up to the 493 range. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 28, S&P is up 4. So as we go into the final segment out here, let's take a look at some additional equities, see what they're doing. We took a look at Chipotle. That looks pretty good, even though it's a light volume move to the upside. Nice wide-ranging bar, trends being broken. Amazon up at its highs out here. Amazon today is trying to, break this little gap down that it had on the trading day of January 4th with 9 million shares. You're only up with 2.7 today. Nonetheless, it's up above that most important 675.89 level. Looks like Amazon is going to go test the December 29th high, 696.44, up there with light volume. Volume on that trading swing is 5.7 million shares. Nonetheless, it is going after that level. If we take a look at Allergan, AGN, having a decent day. First time it's had a decent day in a while out here, but light volume on the bounce. If we just take a look at, see if there's any profile direction for us to get a feel for what this is doing. Brand new profiles appearing on both the daily and the weekly, all occurring today. This looks like 219.56 is the next number to be watching inside of Allergan. AGN's the ticker symbol. If we can get above that, 230 to 247. Becomes the price target level. Biogen, BIIB, trading out at 271.98, having a nice move out here today. Nice little bottoming pattern. That is the Four River Morningstar. You are up with volume today of 715,000 shares. When this came down, which was 1.7 million shares on May 4th. So again, we continue to see some light volume bounces, but volume is only one aspect of trading. If trading were all about one thing, volume, that would make things pretty easy. We would all have to look at one thing. That's all we would take a look at, and we'd all be trading the same. But that's not what it's about. There's momentum. There's other tools. There's volatility, liquidity. There's all those things to look at. Right now, with regard to Biogen, BIIB, it's trading right up into a potential resistance area, which is 279.42 at the high today, 272.35. You clear 279.42, and, the point of control, 272.47. 272.47. If you clear that, then you head to 279.42 to the 281.91 level. That is Biogen, BIIB. To the Google. We know that Google sold off after earnings, a week or two ago, moved down on April 22nd with big volume to the downside, 7 million shares. What is this doing today? Well, it began a brand new market profile on May 2nd out here. That had a bullish bias to it. We're now seeing it move above both the bottom of its daily box, the weekly or the daily point of control. This says that what Google ought to do is go revisit the gap to the downside. That's going to get you into the price range of about 753.92 to the 783.07 level. So Google should move higher. We know that Apple has tested and rejected its lows out here. We still haven't seen any kind of bullish reversal signal. Well, I take that back. We did see a nice hammer candle that formed out here on May 2nd that has held thus far. That had 48 million shares. Friday's test was 43 million shares. Today you're testing with 20 million shares. So there's just not enough energy for Apple to be busted out to the downside out here. That suggests that Apple, if it can ever get above 93.81, that's its resistance level. That is the bottom of its daily box. Then you're looking at a move up into about the 99.80 level, perhaps beyond that. But that will go ahead and put some juice inside of the QQQ series, inside of the NDX. It would help out the Dow as well, with it being, I think, number 13 as far as holding. So, folks, thanks for being here on this marvelous, magnificent, very quiet Monday. I think I have put everybody to sleep out there. Well, you were probably asleep already, but thanks so much for joining us. Stay tuned, because we've got our polar bear, David White. He's going to be up next on the Tom O'Brien Show from 3 to 5, and I'll see you on Terrific Tuesday, oftentimes referred to as Turnaround Tuesday, but we'll count those chickens once they hatch. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.